Hi and welcome back to Siren Crypto. I'm Becky and this is part 2 in our series of videos covering trading psychology. In the first video we covered hope and fear in trading, if you recall. We're all looking at the same information, whether we're looking at charts, news, economic events. Some traders lose while others are consistently profitable. We have talked about how important psychology is to trading, and in this video I just want to develop that theme a little more and look at ways we can change our own trading to become a more consistently profitable trader. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. There are lots of sayings in the markets, and one of them is, and I think it's a true one, it's scared money never wins. Now I would write that down as it's really important. It may be a slight exaggeration, but what it means is, again, going back to the psychology aspect. If you're trading at a level where, let's say the trade goes wrong, it has a massive impact on you. It means that maybe you can't afford to pay the rent or the mortgage next month, and then it makes it really difficult to look at the market in a calm and balanced way. Now, we all know, if you have done any reading around trading, how important it is to be a disciplined trader. And if you're risking a level of money that means if this trade doesn't work out, that it's going to leave you in a bit of a mess financially, it's then a lesson that maybe I need to cut the size of my trade down. It's something that's easily done. So let's have a look at this chart. This is Bitcoin against US dollar tether. It's a historical chart over the last few days. So let's say we're looking at this and Bitcoin was trading around the $8,100 mark. And we want to be a buyer and we buy in around where the arrows indicated at $8,097. I'm going to have my stop around $7,720. It's very easy to decide what size trade you're going to do. What does that percentage of risk mean though? Maybe for you, you are happy losing $50 or 5 or 6% on a trade, so you need to size that trade accordingly. If you feel uncomfortable, say, risking $500 on a trade, then don't do it. Trade a little bit smaller. In this day and age with trading platforms like 3Commas, you can set the size of risk to something you are really comfortable with. So it's great advice to start small. You shouldn't see trading as a get-rich-quick approach to the markets. You should see it as a series of trades over the long run, making you money. Don't risk losing everything on one single trade. The next thing to think about, we touched on this a little bit when we talked about common problems people have when it comes to trading, the psychology aspect, and it's of course that their losses end up being much bigger than their winners. So let's say if someone is losing $100 when they are wrong and only making $50 when they are right, their account then ends up looking something like this. So again, an important part of placing that trade is to ask yourself, does this trade make sense from a risk versus reward point of view? Now that's something we'll talk about in a little bit more detail in the next video. It's important to think, is this a risk really worth taking? If my stop is $50 away, is there really $100 to $150 profit in this trade? And is it something that's worth doing? Like I said, we will talk about that in another video. For now, the theme for this video is going back to the saying, scared money never wins. If even a little move in the market causes you to break out in a sweat to how much you're winning and how much you're losing, then maybe you just need to dial down slightly the amount of risk you're taking on. Let's bring things to a close there, and in the next video we will explore the concept of trading psychology a little bit more. If you like this video, give us a thumbs up. Make sure you don't miss out on all of our videos by clicking the subscribe button. You'll get notified when our next lesson is uploaded. Well, I'm Becky. Thanks for watching Siren Crypto, and I'll see you on the next video. Happy trading!